Good evening, everybody. All right, sorry for the delay. Every time I try to bring Omnovia up, something gets locked up, and I have to jiggle it around. So, anyways, we can still see the obvious. We're still stuck in this wedge formation. Today, the markets had the opportunity to break out to the upside. But very visually, we can see they did bullish or bearish engulfing signals, and they're back into the trading range. So the Dow's trading sideways in the range. The S&P 500. Here's the NASDAQ. After the gap up doji that broke out through this range, bearish engulfing. So that tells us that instead of being a strong breakout, then now at best we might see a trend channel in progress. So the reason we want to do this analysis of what our trend is telling us is so that we know what to expect as another element of whether the market's going to be strong, whether it's going to be weak, or whether it's going to be sideways. And if it's sideways, that means we need to be a little bit more nimble and have our portfolio allocated so that we've got both long and short positions in the portfolio. As we can see in the S&P 500, it came right back down a left-right combo in the overbought area, meaning we could see this trend channel in progress. And what else do we have? We've finally closed out all positions in the crude oil, because you can see this is where you just kind of ask yourself the rhetorical question, which direction is crude oil going right now? If your answer is, don't know, it doesn't have any real direction, then move on to something else. Now, or something else that we moved on to today was wheat. We shorted wheat. Because as you can see, we have a bearish J-hook pattern in progress that has a good prospect of taking this down some more. So we're short wheat right now. And the lean hogs continued its uptrend, and notice how what is creating this uptrend? The bobble. We can see the bobble came up, hit the resistance level, pulled back, in this case the T-line and the 20, and now it's come back up through there. So not only do you have a bobble, but you have a J-hook scoop type pattern. Today was an indecisive day. Makes it very simple. If it opens positive, we'll probably add more hog positions. If it opens lower, we'll take profits with the anticipation that it's going to at least come back down and test the T-line and the 50. Cattle. Cattle, we could see, was in this uptrend, and it was running into resistance here. Today it opened much lower than where it closed on Friday. But notice what it did once it opened. It immediately came back up. That pretty much tells us the uptrend is still in progress. And it's running into resistance here. But they aren't backing off with any great authority at this point. So we're still watching to see if this downward channel can be broken. If so, that means our we've got some running room here. As you can see, the downtrend now has stopped. Now we're hitting higher lows. Now we're looking for a higher high in this trade. And basically we're buying based on this little scoop type setup down here. Interest rates. Bond prices are just moving sideways, so interest rates aren't a factor. Gold prices bounced up today, but nothing that I would say was in any real dramatic trend change. Silver also had a big up day. See if I can get silver to be more intensive here. Silver is not anything for a long-term trade, more short-term trading. I would suspect the channel is in progress. with the next target being the 200, which would be right about the same area as this top. So you might have a very slow channel, so you can trade this one as a channel. Oh, not so much the oil stocks as oil not having any great direction at this point. So you still, that's not bad for oils. It's just telling you there's not going to be a lot of force to the upside, and so a lot of the oils that are coming back up, as you can see, LPI's moved sideways. CPE was another one that had a good looking chart, but it's kind of moving sideways. And Whiting also sideways and might even have a dumpling top in effect. Trade channel is, what were we just looking at that was possibly in a trade channel? Oh, silver. If you can take points, and let's say you run your, do this. You make that a line, and this is basically a parallel line to it. That means this is where you start looking for your top. Then if it starts back down, this is where you start looking for your bottom. So you've got a channel, which means they hit the highs. You can draw a line through the highs. They come back, hit the lows. You can draw a line through the lows. So that's called channel trading, and that is one of the common, trends setups for a price. And that doesn't necessarily mean it's this wild as far as oscillation. Others might be in a trend up like this, but it is in a channel all the way up. So I'll try to point some out. Okay, let's take a look at a few of the ones. ADXS did pull back today, as all the biotechs did. But we're still in this kind of J-hook pattern. Because it's the T-line has been acting as a support this far up, with it closing just below the T-line, you want to give it an extra day to see if they can open it positive. Now, if they open it lower, then you take your profits. But right now, because the T-line has been acting as such an influence in the uptrend, you give it an extra day, see what it's going to do from there. And we closed out a few in the biotech. SEMP, which was starting as a steady eddy, but this closed back below the T-line. We closed it out. Doesn't necessarily mean it won't come back, but right now with that hard a sell-off, it's probably going to need a couple of days to get started back up again, if it does. And the first thing we're going to be looking for is to see what it does at the 50. That and Depot, which was another one that had been acting well until today, with a close below the T-line. Again, this doesn't stop us from getting ready to buy it back if it comes back up above the T-line. But today told us it was time to be out. It may take a few days for the healing to start up. What do you mean by combo candle? Oh, left-right combo is a doji followed by a bearish engulfing signal. RT, bring up the initial or the individual ones when I tell Jim to do the double line. That's when you bring up your individual stock requests. Let's see. Now, Agen, we've stayed long. Even though it backed off, notice where it's coming from, this big fry pan bottom. And notice where this breakout occurred, right exactly where it peaked out before. That tells us even if this opens positive tomorrow, you can still be buying this, because what do we expect coming out of a fry pan bottom? A very strong price move. All right, some of the other charts that look good. TEN had a big left-right combo. And anytime you see this big left-right combo, that usually tells you that after a day of indecision, they've told you with great clarity what their decision is, and that usually creates a lot more upside afterwards. That's in TEN, TRQ, J-hook pattern. This is why we want to know what our patterns look like. There's your good morning star signal. And there's your continuation of a J-hook. So if this is wave one, that means this wave should take us up into about the $4 or the $5, $5.10 range. Still another 25% to the upside. Would you have sold depot when it crossed the T-line, or would you waited to close? I would have waited to the close, because what is our criteria? Criteria is we need to see a candlestick sell signal and a close below the T-line. So if it's already down here, it wasn't good to see it come back below the T-line, but what we still have to acknowledge is that we don't want to see it close below the T-line. And so if you're in an uptrend and they pull back hard like this before the end of the day, it's not unusual to see them bring it right back up and close near the top end of the range or back up above the T-line. So the answer is, yes, I wait until I see a close below the T-line, even though it's come down during the day, because we don't know if they're going to take it back up or not. So if I'm sitting here thinking, all right, it's 10:30 in the morning, they brought this all the way down, and it's sitting right here, I've got two choices. One, I can sell it out and not see whether it closes back up above the T-line. Or two, if it's down here and it's staying down here, I might as well wait until the end of the day. Now, what's your risk-reward factor? Here they could sell it off a little bit more, but they've already sold it off hard. More than likely, they're not going to sell it off too much more. So I'd rather wait to the end of the day, because there are going to be days where they take it down below the T-line and then bring it right back up again. And this one is still going to be bought if they bring it back up above the T-line. Tizu, this is your bobble. Came up, hit the resistance level at the 200, basically pulled back to your T-line area and came up through again. That tells you they don't have any more resistance here at the 200. If this is wave one, which was approximately 4.5 points, that tells us we should be going up into about the $18, $19 area. And Hive, where did we want to see this break out? Right about this area. And what did it do? It broke out. Not only did it break out from the fry pan bottom area, but it broke through the 200. And what do we expect after these type of moves? Big upside moves. That's the reason we were buying calls on Friday on AZEN. So where's the ultimate place to buy? We're trying to find buy signals in the oversold area. Except when we can see a pattern break out, we know the stochastics are probably going to be in the overbought area. That was, did I do Hive? No, I can't remember. Yes, that was a breakout. And LAYN is bigger. This is where you can observe, and this is this is where you observe the obvious, which isn't a difficult observation. We know that we're looking for the slow curve breakout. And where do we want to see a breakout? That where everybody else is probably watching as a resistance level, such as the 50-day moving average. And notice what this did: a Morningstar signal, a doji sandwich, and then they broke through the resistance. Pretty much tells us that the 50 is not going to act as resistance anymore. You can still be buying this one on positive trading. Tizu, yes, I wouldn't be afraid to be buying this one on positive trading tomorrow. If this is the candle that told me that the bulls are taking control, I wouldn't want to see it close back below the halfway point of this candle. If it did, where are you? You're right back into the trading range again. somewhat along the same lines as what the Dow did, basically, is it broke out through a resistance level, but then came back and was trading back into the trading range. It tells us we're not out of the trading range yet. There's another one right at the 50. Did our little doji gap up, telling us it broke through this resistance level. Where's your potential target? First target is right about here where this gap is, which means they'd probably take it up to the 200-day moving average. Now we recommended HA today, Hawaiian Air, because of this little fry pan bottom. Fry pan bottom, and notice what started this one, that kicker signal. Did a doji today, makes it very simple. If it opens positive tomorrow, you want to be buying immediately. Could you please explain when to sell puts and calls as it relates to the oversold and overbought condition? Oh, Mavis, that's a whole different topic, but it's very simple. We're not buying or selling based upon where the stochastics are. We're buying and selling based upon where the pattern or the signals are, and then having the stochastics as a confirming indicator. Oh, and let's see, this is into SAT. Let's see, did I do WTW? There's a nice double slow curve bottom, which means where's your likely target? Probably up here to the 50, which is still a good 17-20% to the upside. No, I don't pay attention to the night activities because that's not where the big money is. This is just nighttime trading, which is up 2.5 or 2 3/4 cents, 2.5 cents. No, I'm looking at the where the big volume, where the big players are, what type of patterns are doing. So it doesn't matter what it's doing after hours because the volume's probably not even 5% of what it does during the day. And my concern that it's trading up? No, because yesterday, what was yesterday? This morning, it traded up a little bit before it started trading back off. Let's see. Tahoe, what has been acting as resistance? The 50. And you've got a downtrending channel. So what did it do today? On a little doji gap up, your best friend, they broke out through the 50. This makes it a very simple trade. If it opens positive, you want to be buying. And very simply, what was the resistance level? The 50-day moving average. So what don't we want to see? We don't want to see it close back below the 50. Are all these option plays or stock? Stock guy, it's up to you. It's up to each individual what kind of trading they want to do. If you're an option trader, you don't buy options on anything different than what your analysis is of the underlying stock. So whether you're buying the stock or the options, it's still going to be the criteria of what's the stock price looking like. AIR, notice what type of signal it's setting up. It was yesterday or Friday. It opened here and closed here. Today they gapped it up and traded positive, but indecisively. So if this opens positive, you basically have a flutter kicker signal and a scoop type pattern and a breakout of the 50. And what do we expect from a flutter kicker signal, which is the strongest signal? If you took out this little flutter, you basically have a kicker signal, more upside. And what is your bigger pattern telling you? Here's wave 1, here's wave 2 of your J-hook. Wave 3 should be from 26 to 37 points up to about the $38 range. Again, Frank, that's in the money, at the money, or out of the money. It all depends on each individual, how aggressive they want to be. But I use a very simple formula. Which one makes the most sense math-wise? And the math will also entail how much time do we have to expiration, how much does the price have to move to make money, pattern are we looking at? Is it going to be a choppy pattern, or is it going to be like in a trend channel where the upside potential could be calculated, or is it a big breakout type of situation, like coming out of out of a fry pan bottom or a J hook? SPIL, notice the gap ups here. I'm pretty sure this is not a, maybe it is traded overseas, but this one you definitely want to buy, because anytime they start gapping it up at the beginning of a trend, that means there's a lot of force coming into that trend. And Wabai, there's that little slow curve supporting right on the T-line. I would say wave 1, wave 2, wave 3, the same as wave 1, should take you up to the 200-day moving average. If we see positive trading from here, essentially breaking out of this little resistance level, means they could probably pop it pretty quick up to the 200-day moving average. And BLDR, another J-hook pattern in progress with a little left-right combo, right smack dab off the T-line. So if this moves 6.5 or 7 points, this should take you up into the $20 area. So this comes back to the question, do you want to buy something that's already up in the overbought area? You do, if you can recognize what type of pattern. It'll be. I'll get to everybody's questions as soon as I get done with my. Today I saw IGTE open up and trade a very small range, right up here. That's usually an indication there's going to be a blast off. So if this opens positive tomorrow, you want to be buying very aggressively. What candlestick is the strongest, best friend or kicker? They're both very strong. Doesn't matter here. Is it a takeover on IGT? I don't know. But there's some, when they trade in a range like that, very small range, that means there's a blast off about ready to occur. And RS, there's your island reversal. You can draw a circle right around this without touching anything, but they gapped it up from here, and where are they right now? They're right back into the trading range. This is a very common, when you see a pullback, you can see there's been a trading range, a pullback. They're likely to bring it right back up into the trading range. Now we have a left-right combo after this gap up, best friend. I would think there's probably going to still be a good steady eddy from this level. That's on RS. KMT, big fry pan bottom. If this opens positive, not only is our first target right here, but it could be much stronger than that. And notice what started this uptrend. This is your belt hold signal. Anytime you see a belt hold and they finish it out by buying afterwards, essentially this pretty much tells you that all the buyers and sellers were fighting, and the sellers were wiped out or capitulated. And as soon as they did, the bulls stepped in, so there's no sellers in the way, which creates the next strong move because there's no sellers in the way. Okay, so there's a buyout on IGTE. All right. So another belt hold was Zillow. Notice where Zillow started its turn up. And they gapped it down and brought it right back up into the trading range, wiped out all the sellers. Now that told you there was no sellers in the way, your upside potential, your upside is extremely strong. RES, there's your classic fry pan bottom, J-hook pattern, telling us if this is wave one, they would definitely get through the 200-day moving average. And a lot of people have been asking, what is a bobble? Bobble is when they come up to a resistance level and pull back, and we can see what type of pullback formations are. Indecisive trading, and they bring it back up through the resistance level. That's usually going to be an indication that they've taken their profits, now they're going back through. Do we always get big, huge moves like this on a pattern breakout? Definitely not. But once again, using the patterns, you're in a position where the probabilities of being in the right place at the right time is much, much greater. So PXP. Here's your bobble. This is Phillips 66. Not a real active trader, but you can see the downtrend is broken. You can see the bobble. Tells us that Phillips 66 is still in a good uptrend. Notice the bobble on this one. AVAL came up, hit the 50, pulled back, did our little J-hook bobble, went through the second time. Probably a lot more upside to this one. All right, and we saw some good shorts today. VT or VLTS. Notice what VLTS did. Not VLTS, VLTC. It started from 1 and went to 22 in a matter of 3 weeks. Then you saw the profit-taking shooting star, gap down, doji sandwich. Percentage-wise, you can be shorting this, and this is where you start throwing everything that you can see how far they're going to take this back, maybe to the 20, maybe to the 50. Or you throw your Fibonacci retracement numbers on here. So you watch to see anything that you might be suspecting as what everybody else is watching, to see what type of signals you're getting at what are possible support levels. The bobble signal always in an up signal? No. Bobble to the downside is just as easy to recognize. And a lot of the, biotechs got hit today. EPRS. That looks like a failure up here. I would suspect they could bring it down into this area. And INSEE also had a very strong reversal. Anytime you see that long-legged spinning top doji, bearish harami, what do we know to do? If it opens lower the next day, they're selling it off. It's time to go short. Where could it possibly move to? Well, if you draw a line right down through here, they could take this all the way back to the 200. Frank, this charting service is CQG. It is the grandfather of all the charting services. As a matter of fact, a lot of the charting services used today use the feed off of CQG. I don't recommend it because it's not any better than any others other than the graphics are pretty good, and I use the graphics for when I write articles for magazines or when I did the books. Just very good graphics. But there's just as good graphics on Metastock, TCNet, Thinkorswim. The graphics now have improved on all the any charting service, that you don't need to be spending $1,200 a month like I do to have these charts. They're just good graphics, and it moves fast, helps us move along in our presentations a little bit faster. And Smegmo, notice it failed at the 50, and it failed to support at the 200. Kind of broke this little downtrending channel. There's just been sell signals here. when it got up to the top, we had our evening star signal with a left-right combo. We had our dark cloud. Now when it came back up and tested the 50, we had a long-legged doji followed by a bearish engulfing signal, your left-right combo. That tells us this is definitely in a downtrend. Oh, I thought it did ESPR. ESPR was trying to break out of its fry pan bottom, and it has failed. This one should have been closed out today because this was breaking out of the wedge and the slow curve with a kicker signal. But remember our very simple rule. If this is the signal, which is a very strong signal, it tells us the bulls are in control, it shouldn't close more than halfway down. Now, on a kicker signal, we give it a little bit benefit of the doubt. But on the second day, where they've closed it below where they opened this signal, and they've closed it below the T-line, and they've told us that this wedge formation is now not breaking out into the upside, that's a pretty good indication that they aren't breaking this one out. Are you cautious about biotech shorts? Yes, because the biotechs can turn on a dime and head right back up. But remember, prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals, that perception coming from human emotions. So if they've decided to sell off a sector, it doesn't matter what the fundamentals are of that sector. They're going to sell it off. So all we're doing is watching the graphic depiction of what's going on in investor sentiment. Okay, I guess that's about all I got for tonight. Again, we're still stuck in this wedge formation, which means if you're buying stuff, you've got to be cautious or conscious of the fact that we're not in a trending market. You want to stay short on Hershey. Ever since your dumpling top, and notice what happened here. They gapped it down. That's exactly what you expect coming out of a dumpling top to force to the downside, just like we would on a fry pan bottom, expect a gap up to break it out on the upside. Okay, hold on with your individual ones here in a second. First of all, is there any general questions on candlesticks? If not, Jim, let's go ahead and do the double line. All right, and in 4.6 seconds, do the second double line. The one thing I wanted to point out is a lot of people say, what do you do about earnings? I follow what the charts tell me. Because notice what happened on Amazon when they reported, I think it was last Friday. Basically, we were in a fry pan bottom, and they weren't selling off. They couldn't close below the T-line, and they were going into earnings that afternoon. So remember, the candlestick signals and patterns is basically the accumulative knowledge of everybody buying and selling during a particular time frame. And if they're still buying, you got to kind of expect that if they're buying going into the earnings, that means somebody a lot smarter than us that has probably a lot closer information on what's going on in the company. If they're buying going into earnings, they know something more than we do. All we're doing is analyzing the chart and having that tell us what's going on. Apple today, right on the close, I bought some of, I think I bought the 136 calls. Because what were they doing going into the close this afternoon? They were still buying. I think it's still trading up in, after hours, up in this range, right below 135. So you still use the patterns, and you can see exactly what's going on in investor sentiment right as those patterns are confirming. GIMO, back and filled. This was another one where we bought the calls, and it popped on their earnings. And what do we expect as far as this trend? Well, we expect this to catch up to it, which it's doing, and then we expect a 45-degree off of there. So anyways, these produced very big profits. I can't, oh, I think I bought over here. So I had the 2250s that I sold out up here and flipped them out into the 30s. OXM, you just stay long as it stays above the T-line, but now you're at least a little bit more aware that we have a left-right combo, that we don't want to see very much weakness tomorrow in this one. We close it out if it closes below the T-line. CLGX, remember, anytime you see a big signal, and that's a big evening star signal, you close out the position, because more than likely there is a high probability there's been a change of investor sentiment. Close it out. You can always buy it back when you see that selling has disappeared. Silver, again, popped up strong today. It's still in a sideways mode, so I would be trading it, not anticipating staying into a position very long. Cisco, just stay long as this stays above the T-line. Intel, ever since their earnings, I think their earnings were over here someplace, you just stay long on this one. As long as I would have been a little bit nervous on Friday if I didn't close it out. It needed to open positive and trade positive to stay in it, which it did. And Micron, just stay long on this one. But this one you need to see open positive tomorrow. If it opens lower, you basically got a bearish doji sandwich in progress in the overbought condition. You probably want to take some profits and see what it does at the T-line. Halliburton, you just stay long on this one. Schlumberger, same scenario. Notice the bobble going on right now. If I owned it, I'd stay long. If I was looking to buy it, I'd buy it right up here as it came up through the 200, because that would tell me that the J-hook bobble is in progress. AMAT, after the left-right combo, anytime you see that left-right combo and a close below the T-line, close it out if you're long, because only bad things happen. At this point, you want to be short, or you can be shorting this one on weakness. AMOT, same here. The bigger the signal, the higher the probability there's been a change of investor sentiment. You want to be out of it. That was a left-right combo. BIB, that's your biotechs in general. But notice where they close. They're right smack dab on the 50-day moving average. You want to see how they open this one tomorrow. And CNC, another one that, because the T-line's been acting as support all the way up, I think this was a bad print. You give it one extra day, but it has to open positive and trade positive to stay in it. And ORBK, this should have been closed out. This is a very simple trade that if we're watching a pullback indecisively and it opens positive right at the T-line and trades positive, it shouldn't come back through the open. If it does, that tells you they aren't going to hold at the T-line. You close out the position. Cyber didn't do too much of anything today, so you just stay long on this one. And ALYS. Uh-oh. ALYS. AYLS. Yeah, that one's not coming up for some reason. We did Schlumberger. Silver Wheaton. You get ready to buy this one on the little doji gap up if it opens above the 50, and then you just use the 50 as your stop. It shouldn't close back below that level. This one you should have been out of for the last few days, ever since they closed it below the T-line. Again, this is your steady eddy until they close it below the T-line. Right now, I would suspect they're going to come back at least down to the 50-day moving average. And SCYM, nothing here to get excited about. I wouldn't be long or short this one right now. Oops. Hold on for a second. Okay, so all right, got it straightened up. Nice fry pan bottom. You would stay long on this as long as it stays above the T line. OVAS. Should be out of this one. With it backing off on, you really haven't had anything to tell you to get in this one ever since the doji sandwich up here. And still telling you shouldn't be long. You still should be short. UNP. Nothing to get excited about here. I wouldn't be long or short this one. First of all, there's not enough movement in it. Secondly, right now there's no direction. So if you can look at a chart and not figure out what it's doing, move on. There's too many charts that you can figure out what's going on. GMCR. You could buy this on positive trading with the prospect of a doji sandwich and breaking out through this downtrending channel, but it's not a very fast mover at this point, with it being in a lot of institutional accounts. But you can be buying this one on positive trading tomorrow. And XBI definitely should have been out of this one today. Apple's still coming out of this fry pan bottom. It's going to probably open up in this range, which tells you what? Tells you they didn't resist anymore over here at the fry pan bottom, that you're probably still got a lot more upside. And Sunni, you should have been out of this one Friday. Definitely should have been out of it today. Now you can possibly go short with the anticipation they could bring it back down if this market gets weak, down to the 50-day moving average. Baba just is nothing that you'd be excited about either. It's had a big basing period, but it's not out of that basing period yet. That'd be someplace else. XLV. Healthcare just moving sideways. Nothing to show any great trend in this one. Disney, you stay long, but with the kind of the dark cloud, not a dark cloud, but a kind of a mini belt hold, we definitely positive. Right now it's above the 3T line, let alone the T line. You stay long as it doesn't close negative tomorrow. And Goldman, another one that after the kind of the bearish belt hold, now you've had a second close back below the T line. I don't ever trade Goldman because it doesn't move around enough, but it's a good indicator of what's going on in the market in general. Right now, looks like they're going to be bringing it back to the bottom of the trend, which is what the whole market is indicating. WNR, just stay long. Nice J-hook pattern in progress. QIHU acted well today. Staying long on this one with the anticipation that if they break out again above this level, at least their first target is up here at the 200-day moving average. Alcoa, another one that you can't get too excited about. It's still in a basing period. I would probably anticipate this is moving sideways until the 50-day moving average catches up to it or catches down to it. Another one moving sideways. Target, I wouldn't be long or short this one right now. Should have been out of this one today. Yeah. VRX, same scenario. When these charts all start looking just sideways, move on to something else. There's going to be a lot of charts that have no direction to them. But again, the advantage with candlestick analysis is you can scan to see which sectors / stocks are moving the best. You just disregard the ones that aren't moving, and you put your money in the ones that are moving or having a good patterns. Fran needed to break out today. You stay long if you're long because it's still in a J-hook pattern, but it has to open positive. It has to open positive to stay in it. If it opens lower, it does two things. It's confirming the left-right combo evening star signal, telling you they aren't breaking out, and it's telling you the trajectory is gone, that you're now in a sideways mode. That was free. Guild. Guild, same scenario. You can see there's no direction to this one. We did target Twitter. Same thing. I wouldn't be long or short this one. And Loco. Loco, you can stay long, but as you can see, after the 2 indecisive trading days, it has to open positive and trade positive. If it opens lower, back below the T-line, your trajectory is gone on that one also. Rosetta should have been closed out a few days ago and just has not been able to get started after that. So basically it tells you might have a J-hook pattern in progress, but you do have to wait until the next buy signal comes in. And HZNP. You had a bearish engulfing signal, a bunch of dojis, bearish engulfing. Definitely told you today they weren't going up. They're starting to pull back, going sideways at best, but possibility of coming back down to one of the major moving averages. CYN, wouldn't be long or short this one. Nothing there. MFC, left-right combo, makes it very simple. If it opens lower, they're coming back to test the T-line, but then you have to see what it does at that level to buy back in. ASPS, nice big fry pan bottom still in progress. You can stay long on this one. And FIVN pulled back today. This one should have been closed out. You had your bearish engulfing signal closing below the T-line. Should have been closed out. Once again, it could always be bought back with it closing back up above the T-line. XYL. This came back into the trading range. There was your kind of your range, came right back into it. If it opens lower tomorrow, what is this? This is the discretionary select sector. Wouldn't know what that is. Just to stay in this one, it has to open positive and start trading positive. Oh, as a short, no, I wouldn't go short. You've got too much support in here. Tesla. Kicker, trend kicker, up through the 200. Stay long on this one. CUDA. CUDA should have been closed out today. Had 3 dojis. Then they told you what their decision was after this indecisive area. This one should have been closed out. EWC got up close to the 200. You stay long, but if this opens lower, they're coming back down to test the T-line, telling you they've failed the 200, which means you'll probably be at best in a bobble. Nuance, you stay long on this one. I would use a close back below the 200, which would be halfway below this candle after kind of almost a tweezer top, but you got a shooting star today. If they start selling it off, they're probably waiting for the T-line to catch up. And let's see, we did cyber, nothing wrong there. Just a little backing and filling today. We did Apple, Starbucks. Starbucks, I've never traded it because it's so slow and stodgy, but this is kind of your trend channel. You can see where the top of the channel is, and you can pretty much see where the bottom of the channel is. So with the bearish engulfing signal today, if it opens lower, you close it out because it's going to come back and at least test the T-line and tell you still that your uptrending channel isn't all that dynamic. Ren, get ready to close this out. If I own this one, I'd have my stop at today's low. If it comes down through there, you know they're coming back at least to the 200 and the T-line. All right, did they report earnings on ABC? It has to break out through this upward channel for that to happen. Sean, you just buy what you're comfortable with and what you think the price move may be. On Amazon, I don't want to tell you my FUPA on Amazon, but I bought the calls knowing that they were going to report earnings. But on this day, I sold them because I thought they'd already reported earnings and nothing happened. Instead of just putting out a little quick question in the chat room, when does Amazon report their earnings? So that cost a few $1,000s of not being in that one. So this one, what did I do? I think I had like 400s or something. I can't remember. But I pick out something where if it works, the works big. It's the what I bought. It wasn't that expensive because it was much higher. It's going to produce big profits. If it doesn't work, I don't have that much money involved in it. Domino's Pizza. This bearish engulfing, I would still stay long on this one, but if it opened lower, expect to pull back at least to the T-line. All these recommendations are to buy only if it opens positive tomorrow. Yes, if you're going long. What you don't want to see is that you wake up and find out the pre-market futures on the Dow are down 100 points. That pretty much says there's not going to be a whole lot of buying going on unless there's something specifically dynamic going on in that individual stock. On the other hand, if the market opens flat or down a little bit, showing there isn't any real major change of what we expect the market to be doing, which is essentially sideways, and the stock is trading up, yes, you want to be buying. That tells you there's not been a major change of the overall market sentiment, and whatever you were analyzing that has a strong buy signal, if they're buying the next day and the market's not changing, that means they're confirming that signal. SSO, let's see, Ultra, oh, that's the Ultras on the S&P. Yeah, again, a left, right, and where did it occur? Right here at the resistance level. Baidu. Baidu has to start trading higher. It's still not a real, any great, say, trend. But if it opens higher, telling us that they've broken out through this level, then you can be buying because they're probably at least going to come back up and test the recent highs. DGAS, you can stay long on this one. And UGAS. Uh-oh. I don't know. Can you short the ETFs, the ETNs at these prices? I guess so. Anyways, I wouldn't be buying. I'd still be short on this one. The faint green line in here is the 3T line. And the 3T line is another element that you can use that if you start moving away from the T line, the 3T becomes much more effective. Sketchers, you want to stay short on this one now. Whoops, no you don't. Stay long on this one because it came out of this slow curve, broke out through this channel. It tells you you've got a new dynamic on this one. Now you just watch for a sell signal. DD came out of a scoop pattern. You can buy this one on positive trading. It's still not going to be a real active one, but at least know which direction you're heading in on this one. LYB, just stay long. I would use, right now I'd be using today's open as my stop. EC, another slow curve. You can be buying this one. That's a good looking chart. Breaking out through this little level. Slow curve. Notice your doji gap up. I would suspect at least coming up to this level and possibly higher. BPT held up well today. Just stay long. There was that bobble that came out, which was the same that happened to BIDA. BIDA had the nice little bobble. It's probably going to the 200-day moving average. LJPC, probably coming back to test the T-line. And you'll see what it does from there. JRJC still has to break out through this level. So right now you've got the potential of a J-hook pattern. I would rather pay $8 for it knowing that it came up through the 200-day moving average. Mobley, you just stay long. You have mentioned multiple dojis can result in explosive growth. Is this an example of that? No, usually you want to see the multiple. This is now this is just a trend, and at this point, I would put my sell stop at the T line. If it comes back down through there, they're selling it off hard. Now, I usually want to see it close below the T line. So if I see a bunch of dojis, we know that you're in an uptrend, but if they decide to sell it off hard, you put your stop right here at the T line. Now, remember, we just said you wait to the end of the day. In this case, if I saw it come down early through the T line and then reversed and started coming back up, you just put your buy stop at the T line. If it comes back up through there, obviously you're right back in it again. You use the T line on weekly, monthly charts? Yes. The T line works just as well on a 1 minute, 10 minute, 60 minute as it does on a daily, weekly, or monthly. And CTRP, uh-oh, is it type it or C? Just stay long, but notice that you've got a resistance level up here. So here's another case where I'd have my stop at the T line. It shouldn't come back in that direction. Yeah, unfortunately, Dale, right now it's 3-0 the Cubs. Okay, ABC before the open makes it very simple. If they gap this one up above today's open, you know you've got a kicker type signal that you're now breaking out this wave, and where's your next move? Right up along the top of this channel up here in this range. Yeah, but game's not over. Why is AGN a buy on positive open, but REN you want to put in a stop and look to sell? Charts nearly identical. AGEN in a parabolic move, but if it opens positive, you have a doji sandwich in progress. And REN is a more of a shooting star. Notice where they opened and closed it, way down here at the bottom. And if they came back through this level, that'd be confirming the shooting star. So there's kind of two different dojis. Shooting star doji. What was the other one? How can I already? AGEN. Oh, yeah, close to it. And I'd probably still do the same thing here. That if they open or start trading back below today's low, I'd take profits and see if it's going to come back to the T-line. The 3 T-line is a 3 exponential moving average, which is a lot quicker to use, especially if it starts moving away from the T-line. Line has to stay above the T-line, means it has to open positive tomorrow. BTU, nothing here. If you're short, you stay short, but you would have had a short above $5. Right now, I wouldn't be buying this until you see a buy signal. And SIG, all you can do with this one is stay long. You did have a little left-right, but it was a little left-right combo. Didn't really show there was a massive change of investor sentiment. And it's still trading above the 3T line. SYMC, you stay long on this one. The percent move isn't all that big. But if you like it, you can stay long on it. As long as it stays above the T line. SYMC, apparently I just did that. NBR, stay long and use the T line as your stop. PHMD, that's a nice little slow curve breakout. You can be buying this one provided the volume is good. Where did I go here? Good breakout after the slow curve. Look for a 45 degree to come off of here. Leaf. Leaf, you stay long. You don't want to see this one trade or close below the T line. You did BIDA, EW, stay short. You had your left-right combo confirmed. Your next target is the 200-day moving average. And the VIX, oh, I don't know what the VIX is over here. VXX. If it opens positive and starts trading positive tomorrow, yes. First Solar. First Solar needed is still in the fry pan bottom trajectory, but a very sketchy one. It has to open positive and trade positive tomorrow to stay in it. Otherwise, you've lost the trajectory. And Joy, you can be buying this one with your anticipation after the bobble that your next target is the 200-day moving average. Okay, well, got done in BIDA. BIDA, you stay long. It's more than likely going to the 200-day moving average. And last one, JetBlue. JetBlue, nah, you can stay long on this one, but if it opens lower tomorrow after your left-right combo, notice that you're relatively flat. There's really no big prospects for this one. Okay, last ones. SCIQ, get ready to close this one out on a lower open. Microsoft, you can stay long. I've never traded it because it's too slow, but if you like it, you can stay long on this one. Duke Energy, very slow uptrend. Yeah, you can stay long as it doesn't close below the T line. And the SPY, oops, maybe it doesn't come up over here. No, it's not coming up over here. Last one, SYMX. Get ready to buy this one on Positive Trading and just use today's open as your stop. But notice the kicker signal, breakout of a big fry pan bottom. Wow. There's a new dynamic in this stock. Let's see, STX.X. I don't know. I don't think that works over here. Okay. We'll call it a night. Everybody have a good evening. We'll see you in the chat rooms tomorrow. We'll see you then.